What's going on, guys? Welcome back to Empire Financial Podcast. I'm your host, Waldry Marte, or Marte Money. Today, I have a very, very special guest. She's come all the way from I don't know where, but the point is that she's going to teach us about a very important topic that no one talks about. You have to pay thousands of dollars in order for you to go to a seminar to learn more about this topic and what's going on and how you can kick the can down the road, save money, and do the right thing, reinvest your money. With us today is Erica Baldino, the title queen from Kensington Vanguard. Welcome.
Thank you so much. Happy to be here.
Absolutely. I'm so excited that you came. You know, we had a meeting not too long ago, and we had to just simply bring that meeting to this podcast to educate you guys because, again, you will enjoy this content. You're going to learn a lot, especially if you're a real estate investor, especially if you're looking to grow and become wealthy in the real estate space. These are the topics that the rich and the wealthy are all talking about and actually implementing, not just talking about it.
Yep.
When you implement these topics that you're going to learn today only at Empire Financial for free, we're going to have the premium subscribe version coming soon, guys, because this is just getting out of hand. Anyways, guys, please, we're going to have a list of questions here. If you have any more follow-up questions, please put them in the comments, and we are going to get back to you and let you know exactly what you can do. So today I wanted to talk about 1031 exchanges because I know you are the title queen and you are very well versed in that world.
Yes, that's
She
great.
actually blew my mind. Well, not just mine, but everyone at the table at the time. I think a 1 hour meeting turned into a 3 hour meeting.
It was about a 3 hour meeting.
And then we were late to everything else. But it was very well worth it. So when you have a smart, beautiful, and intelligent person in the room, you got to make sure that you make them feel great. You make them feel special. So you make sure you comment, you like, you subscribe, and you follow her on all her socials, which is going to be in the description below.
Thank you.
So Erica, of course, thank you for coming. Can you tell us a little bit about your role and how you got into a title and 1031 exchanges?
Sure. So I actually, when I graduated college, I was in for chemistry, and I actually was a chemist for the state of New Jersey. I did like what I was doing, but I wanted to go into sales, and I was told to try a sales role at a title company so I could gain that experience, and I kind of just took off with it. So I've been in the space for the last 14 years. 2 years ago, NJ Biz awarded me 40 under 40 in business professionals in the state. So I've been kicking butt ever since.
Yeah, literally 40 under 40 is crazy. You should be doing like 20 under 20 because
I'm only 19. Yeah, that's right.
21? What are you talking about?
Yeah, 30 under 30.
Jesus
Good. Yeah.
Christ. So it's so true because most people that are in real estate fall into it by accident.
Yeah.
Whether you're a title person, a lender, a realtor, an appraiser, a home inspector, you don't go to school to become something in the real estate profession. Unless your daddy's Donald Trump. I don't know. Maybe you do.
Then maybe you do.
So what exactly is a 1031 exchange in simple terms?
Sure. So when you sell a property that you use for investment, it can't be a flip property. Flips are considered dealer properties with the IRS, so flips are not considered investment properties. But when you sell an Airbnb or any sort of property that you've had rent on, it could be even something out of the ordinary. It could be a piece of land that you've had a cell phone tower rental on. You will be subject to capital gains. That is when the tax man comes calling a year later. Most investors understand how to use 1031 exchanges because instead of realizing that tax and having to pay for it, they actually, like you said earlier, they kick that can down the road. It's important to always ask the question when you start a 1031 exchange, what your basis is in the property. And while you build your investment portfolio, you should be concerned of the basis in the property, if that makes sense.
What is the basis exactly for the audience?
Sure. So your basis in the property, many first-time investors can never really calculate it correctly. Your basis in the property is the amount that you bought the property for, and then you add in the amount that the CapEx improvements. So if you bought the property for $100,000 and you've put $200,000 into the property, your basis is now $300,000. Then you minus out any depreciation. So every time you call your accountant and you're like, just write it off, what they're doing is they're depreciating your investment.
The basis.
The basis, right? So you take your $300,000, let's say you've had it for 30 years. That means that they're depreciating it over 30 years. Your basis is now zero. This means when you go to sell, if you sell $1 million at $1 million, you will be taxed at whatever your percentage is on that entire $1 million because you've got no basis left in the property.
That's a great explanation. Actually, I keep learning from you every time you say words. They're just gold. So thank you.
Yeah. So once you know your basis, then you can contemplate a 1031 exchange. So if you have an investor whose basis is $1 million and they're only making $1.1 million from the sale, then a 1031 exchange isn't really right for them. They don't have to pay a lot of taxes. They could take the money off the table and they could put it in their pocket. When you start to look into the world of 1031 exchanging, now I'm going to subject you to tighter deadlines and you're going to have to be forced to buy a property very quickly. And so you really only want to do that if you're going to defer a number of like a lot of money.
What do you consider to be a lot of money?
So people ask me this question and it's funny. Like, I don't know what your appetite is to pay the tax man. Like, I've had clients call me that said that they don't care. It's only $10,000. They're doing a 1031 exchange because they don't want to pay the IRS. I had somebody that decided to pay the IRS $3 million because he didn't want to do a 1031 exchange. So like in both those scenarios, I didn't agree with the professional. I would have never paid the IRS $3 million. I also would have probably gladly paid the IRS $10,000, taken my money off the table and waited on the sidelines to reinvest when I was happy with the real estate opportunity.
Erica and I look forward to having the opportunity to not worry about $3 million going to the IRS.
Yeah. I mean, listen, $3 million is a lot of money, but at the end of the day, the gentleman who decided not to do the 1031 exchange, his 4 kids wanted his money. So each of them got $1 million and they paid the IRS $3 million. Crazy.
So let me ask you this. Is a 1031 exchange only designed for investors, or is there any other type of group of people that would benefit from a 1031?
So it's really anybody that owns a property, a second property. So some 1031 exchanges could be for a vacation home that they may have or a vacation rental. There are very rare cases where 1031 exchanges are used in primary residences. Sometimes you get your standard deduction if you've lived there 2 out of the last 5 years. However, people will convert it to a rental property, maybe the last year of ownership, especially if they've made a ton of money. I just did a seminar where a gentleman, he said he bought in Franklin Lakes for $750,000 30 years ago. The property's now worth $3.5 million. So unfortunately, he has a ton of gains in this property. So he's going to move out for the next year, 2 years, use it as a rental, and then he'll be able to do the exchange.
What are the exact deadlines when it comes to a 1031 exchange?
Sure. So once the money hits my bank account, so your day of closing, you have 45 days to identify a new property and you have a total of 180 days to close. So they are tight, which is why whenever I counsel somebody on an exchange, I tell people that they really should start shopping for the property prior to even selling the one that they're going to sell. Because in this market specifically, when you own a property, there's so many buyers out there, but when you become the buyer, it's such a pain in the butt to find something that is in your investment buy box or that fits your appetite or has the numbers, the ROI. So it's good to start shopping earlier rather than later.
So what Erica is saying is very important for you to consult your real estate professionals and let them know exactly what your goals are so we can help design that goal in a way that helps you get to where you got to go. And not just get there, but get there safer, get there faster, and get there with less implications.
Correct.
With the tax man.
And it's great to make sure that you're pre-approved for a mortgage because with 1031 exchanges, you have to replace the debt on the property. So if you're paying off $1 million payoff, then in your new property, you need to have another $1 million loan. If not, you have to come liquid with another $1 million. So you are always replacing equity and debt in a 1031 exchange.
I thought it was just equity. I didn't know that.
No, it's debt as well.
Gold, people.
You have to
Gold.
carry debt.
Now, I understand that 1031 is like the main, let's call it,
way to defer.
The main way to defer taxes.
Sure.
Thank you, in real estate.
Yep.
And then we discussed other ways that you could defer taxes through a 1031 vehicle.
Sure.
Can you talk to us more about that?
Okay, so there's a couple different ways to defer taxes. I understand the 1031 exchanges because this is half of what I do for a living. The other half is the title insurance. When you purchase in a 1031 exchange, you can either buy another piece of actively managed property. So if you and I were selling an asset and we wanted to go buy a 4-family house, we could do that, not a problem. However, if we couldn't find anything to replace, you also can go into funds, managed assets that have big sponsors. So let's say you and I were sick of managing our 4-family house. We were sick of the terrible teas, the tenants, the toilets, the trash. Then we would buy into like a warehouse REIT or a cold storage REIT. I use the word REIT. It's not what they are. They look like them, but they're called Delaware Statutory Trusts. but REIT is sort of the easiest way for people to understand that.
Delaware Statutory Trust.
Yeah, so they're called Delaware Statutory Trusts. So the fundamental difference between a REIT and a DST,
Real Estate
Investment Trust, is that a DST has ownership units, whereas the REIT has shares. So you can't go from owning a piece of property to buying shares. That's not legal in the terms of the 1031 exchange. But you can go from selling your ownership to buying more ownership. So the DST is a way where if you only had $500,000 to spend, but you really loved data centers in the Midwest, then you could spend the $500,000 in a data center with a bunch of other people and make, your ROI there without managing the asset. There's other ways too to defer capital gains, not just 1031 exchanges. So if you didn't want to utilize the 1031 exchange, you could throw all of your proceeds into an opportunity zone, which with the last iteration of the One Big Beautiful Bill, they've really expanded on opportunity zones. And there's other different ways. Again, I'm not really qualified to sort of explore these because I'm not an attorney and I'm not an accountant.
But she is the queen.
But I am the queen. But you can ask your accountant about doing like a qualified remainder trust, which is where you're obligating all the proceeds to a charity. And also when the seller holds a note. So that's when the seller holds paper for the buyer, you're able to take the proceeds off the table year after year. So there's other ways that you can kind of skin this cat.
There are many ways, which is why it's so important to always hire professionals. And I keep saying hiring professionals because unfortunately in our industry, a lot of people are part-time.
Yes.
A lot of people are doing this on the side.
Yes.
A lot of people don't necessarily treat it as a career, whereas we do. And so when I say a professional, I mean someone who has been seasoned, someone that has a track record, someone that has reviews that you can actually look up and figure out, is this a real, actual, valuable real estate professional?
Yeah, I mean, not only do we eat, breathe, sleep real estate, I tell people I work 8 days a week, but like we've also seen a lot of different scenarios. So because we've been doing this for so long, I feel like we've seen the best, and the worst, the worst. So I'm able to give, some guidance just from, the war stories that I have.
Now that we're getting into the nitty gritty of your scars and all the wounds that you have from the battles of real estate, I would love to hear some of the situations or clients unintentionally creating tax problems for themselves.
Sure. So a lot of people don't speak with their financial advisor or their accountant before they sell, which is such a big mistake. But a lot of people just act first, they beg for forgiveness later. So they might not even realize they need to do a 1031 exchange. So I always encourage all of my investors before you sell any property. Yes, it's great to talk to your real estate agent, and yes, it's great to talk to your lender, but call your accountant so that we could talk about the basis to begin with. If their accountant's not on board, sometimes they're making mistakes, like they're selling as an individual and they're buying in a multi-member LLC. That's not okay. You can't start adding people to your exchange. So they will basically create a liability. They'll have to pay taxes. Sometimes they start trying to pay a bunch of stuff at the sale. So they'll sell their property, but then they're like, oh, pay off this private mortgage, pay off my kid's daycare, all of that's not allowed. So you will create what's called boot in a 1031 exchange, and you'll be taxed on it later down the line.
And then Erica's going to boot your ass to the curb for not listening to her in the first place.
Correct. Yes.
What advice, Erica, would you give to real estate agents, brokers, and investors working together in a transaction? What would help it be more seamless in the process?
Any real estate agent that knowingly lists a property that's for rent, whether it be a single family rental, whether it be a 2, 3, 4 family house, whether it be a building, they should always bring up a 1031 exchange. A lot of people like to say, hey, it's not my problem. But I do believe that you should at least clue the client into the fact that they're going to pay all of this money, because the worst part is after the client sells, they don't know about a 1031 exchange. They get their tax bill and they always say, why didn't my real estate agent tell me? Why didn't my mortgage guy tell me? Why didn't my attorney tell me? Like, if people could just start to say, hey, you should talk to Erica before we sell to make sure you're okay, I think everything could be much smoother. The problem is sometimes I'll get phone calls, hey, Erica, I've got $3 million in my bank account. Can we do a 1031 exchange? The answer is no. I have to be involved before you sell the property. So if you put that money in your bank account and then call me, you'll create a tax liability.
So where does the money go once the property sells? Is it into your bank account?
It goes into so it goes into our trust account. We have a QI account, so they're insured and backed, and we are part of a $15 billion company, so they're segregated accounts. but we hold it for the duration of the exchange.
Can someone exchange multiple properties or come together in like a pool of properties and use that as a 1031, or is it individually per property?
Sure. So yes, as long as you hold title the right way. So you could sell 3 or 4 properties all at the same time that are all titled in the same LLC or in your name individually, and you could buy one property, that's fine. Or you could sell one big $10 million property and start to buy, $2 million here, $3 million there, $4 million there. That's absolutely fine.
What if they were in separate LLCs, or for example, there was a holding company and then they owned a bunch of them?
I will teach you another phrase. So there are single member LLCs disregarded for tax purposes. So they're called DREs. So as long as the LLC is a single member, you can kind of become more fluid with where the LLCs are. The minute there's partners, even if it's a spouse, it complicates things, and it's got to be what's called the same taxpayer rule. So the LLC that sells has to be the LLC that buys. One last thing I'd like to point out, like the reason why 1031 exchanges are so important, we mentioned it a couple times, like just kicking the gains can down the road, is because when you pass, then your kids inherit it at a step up in basis. And that's really the primary driver of generational wealth. Like if you want to leave your kids anything, leaving them a real estate portfolio where when they inherit it, maybe they pay inheritance tax, but no capital gains is like the best thing you could do for them.
And explain one more time the step up in basis part.
Sure. So, let's go back to the original example where, you bought a house for $100,000, you put $200,000 in it, your basis is $300. Let's pretend we've depreciated it all the way to zero. Okay. So now if you sold it for $1 million, you'd be responsible for anywhere between 10 and 30% capital gains. Let's say we've 1031 exchanged it. So we've taken the $1 million sale, we've bought something for $2 million. Then we sell for $2 million, we buy for $4 million. All of a sudden you've got $10 million worth of real estate. If you were to sell it before you died, then you'd be taxed on all of those gains from the zero basis that you push forward. But when you pass, your next of kin inherits it at fair market value. So they inherit it at a value of 10 million, and then they can sell it and pay no capital gains.
If it's sold it for 10 million, straight up.
Straight up.
As soon as they inherited
Straight up. It's totally absolved from any capital gains. They don't pay for the sins of their fathers, is the line that I like to use.
Step up in basis.
The full step up in basis. So they inherit it at the fair market value at the time of death. This is, again, how wealthy families keep the wealth within themselves, because they just never sell.
Yeah. What would you say are some of the common misconceptions when it comes to 1031?
The biggest misconception is that we call it a like-kind exchange as well. And people don't understand what the word like kind means. So the way that the tax code used to be written is that we used to be able to exchange any investment property or any piece for anything that was an investment. So you could 1031 exchange cars like Lamborghinis. You could 1031 exchange Birkin bags, exotic fish, artwork. Our company had a very big trucking 1031 exchange portion. So you'd exchange your warehouse and you'd also exchange the trucks as collateral.
Wow.
You can't do that anymore.
Oh.
That obviously got way out of hand. People were selling these huge buildings and buying Ferraris and Lambos, and it kind of spiraled. So they redid the tax code and they said, now you can only sell like kind, which is real estate for real estate. The problem is, and the misconception of that is people are like, oh, I'm selling my one family house, I have to buy another one family. Or, oh, I'm selling this strip mall, I have to buy another strip mall. That's not what like kind means. You can buy any investment asset you want as long as it's real estate. So you don't have to stick to each asset class, if that makes sense.
But it has to be the same or larger or a greater amount.
For a full taxable deferral. So if you buy something that's smaller, you're going to get taxed on the differential.
So guys, I'm going to stop this podcast right here because I think we've given you enough nuggets.
It's a lot.
The problem is that, number one, my brain is already fried and it's only been a couple of minutes, which is why we spent 3 hours, because I took little breaks in between to absorb the information, right? So that being said, guys, as you can see, Erica is a title queen, 1031 queen. If you are looking for more information, if you are looking to get more educated, and you have a specific scenario where you need someone with this expertise to teach them, or rather to learn, and how you can benefit from a 1031 or SBI, FBP, ABCD, EFG, all the different acronyms that were mentioned, it's important for you to contact her. Now, how can people get in touch with you?
Sure. So my Instagram's at Erica Baldino. You also could call my cell phone. We'll put it in the comments. And also my email will be in the comments as well.
Erica with a K. Don't get it twisted. Ya dig? Guys, you heard it here first. 1031 exchange and also much amazing other content coming up very soon. So make sure you tune in and you watch the next episode. Again, thanks so much to Erica for coming out here today. And we're very excited to see her again soon.